Watch his exceptional story, Pursuits by Škoda, only on Bloomberg Quint.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets recover from the lows of the day to trade in the green now. The Nifty trades above the 11,600 mark and all sectoral indices are trading with gains. Quest Corp is trading with strong gains after the company decided to issue over 7.5 lakh preferential shares to Amazon for 51 crore rupees. IndusInd Bank and Infosys will be reporting their earnings today. Both the stocks are trading little changed at the moment. And Karnataka Chief Minister HD Kumaraswamy has sought to move the trust vote in the Karnataka Assembly in order to prove his majority on the floor of the House. Good afternoon, Neeraj. Well, some bit of strength seen now in the last hour of trade. We're firmly trading above the mark of 11,600 now.
Yeah, it's almost like a humdinger, like the way the Karnataka Assembly is right now, Navneet. Very choppy, the markets up about 1/3%, as Navneet said, trading around the high point of the day. But this is nothing dramatic. I mean, it's just about less than 0.5%. So you can't even really say that this is a convincing rally that we have. The Bank Nifty too, about 1/3%. Nothing too dramatic out there either. So moving in tandem, about 1/3% for both of the indices. The mid caps and the small caps will come up on your screen. The start of the trading day was okay, and right now the mid cap index in particular up about 1%. So sounds pretty interesting. Well, Devina will speak about what's happening in that bucket. Let me just speak about the large caps first and bring up the heat map and show you what's moving and what's not. The market rate is still similar to what it was when it started off. The losers have changed a little bit. So Wipro is now the top loser, down about 2.5%. Larsen and Toubro about 2.5%. Bharti about 1.5%, and Bajaj Finance about 1.5%. But those are a few, maybe a few financials which have come off in the session today. Look at the gaining side. Tata Steel, 3.5%, very strong move by this one. I don't know if it's got to do with some expectations of some benefits or some help from the government coming in for the beleaguered steel sector, but maybe that's what's gotten some of these steel companies excited. Tata Motors is 3% higher, Vedanta about 3% higher. There's some strength in Hero MotoCorp, in Asian Paints about 1.5%. Bajaj Finserv is up 1.5%, even though Bajaj Finance is down about 1.5%. I think what is giving support, amongst other things, is big boy Reliance Industries up about 1%, doing rather well for itself. So good start, good going for now. Let's see if this lasts. The broader market's doing even better.
Yeah, and it's a weekly close, so let's see. It's not been a bad week of sorts, so to speak. So by the end of trade, hopefully we should see a positive number if we maintain this, or we probably do better than this towards the last half an hour of trade. Individual stocks then are going to remain in focus, starting off first with some stocks with result reactions. So first off being Den Networks reported numbers yesterday. A decent set of numbers. The stock in yesterday's session pre-numbers was up 12%. Today as well is up about 5.5%. GNA Axles reported its numbers just a few minutes ago. A 30% jump in net profit and revenue. Margin improved to about, I think, 16%. And the stocks moved up about 13% on the back of those good numbers. KPR Mills is in focus as the first casualty of the buyback tax of 20%. They have withdrawn their buyback program. The stock's down about 3%. Other stocks on the move, Quest Corp, we just spoke about that one, preferential issue of 7.5 lakh shares to Amazon. Intraday move was much higher, I think about 18% post, which is cooled off now, but it's still a good hefty 9%. Then you've got an Intellect Design and a Balram Puccini doing well. Volume buzzers, you've got Tube Investment, which is up on 11 lakh shares traded. Then you've got the likes of Philip Cap, that's up about 12.5%. And then you've got V-Guard, which is up on 8 lakh shares that have been traded. Other volume buzzers on the downside, Diwan Housing is the one that's looking slightly weak today, about 3.5% given up. 1.7 crore shares have been traded on Diwan Housing Finance. Talks of what kind of resolution will likely come about, whether the debt is converted into equity or no, and whether SBI takes majority control thereabouts. DHFL down about 3.7%. Then you've got InfoEdge also, which is down on the back of about 2 lakh shares traded at at or near 52-week lows is Deepak Fertilizers. 101.8 is its 52-week low, so it's breached that, made a new 52-week low right now. And Century Plyboard, 145 is its 52-week low, so very close to that mark. But what's happening in the futures and options space and what's buzzing thereabouts? Navneet is here to tell us. Navneet.
Thanks for that, Davina. Well, yesterday's rally was on account of short covering. And today, if you look at Nifty futures, there are no major positions being built up. And I think that's the reason why Nifty is finding it that difficult to inch higher. Remember, in the morning session, it did touch the 11,600 mark. But in the last hour of trade, we've managed to trade above that, though we're off the highs as of now. Premium of about only 5 points seen for Nifty futures, though Bank Nifty has been seeing more action compared to Nifty, as open interest there is up about 9%, and I believe this is the third straight day when the Bank Nifty futures are trading at a discount. Though volatility continues to be lower, which could be a positive sign for the bulls in this market. Yesterday it was down 8%, today it's down another 3.5%. So India VIX is trading around the levels of about 12. What levels to watch out for the next week? For the next weekly expiry on Thursday, maximum open interest is at the 11,600 call, followed by 11,700 call, whereas on the put side it is at the 11,500 strike. So 200 point is the range that we're watching out at least till next Thursday. But in today's action, 11,600 strike has seen open interest addition on both call as well as put side. And if you take the premium, the call premium is somewhere about 70 rupees and the put premium is about 50 rupees. So that's giving you a range of about 11,550 on the downside to about 11,670 now on the upside. So watch out for this range. In terms of stock futures, Max Financial has seen some buying interest in today's trade. The futures have also seen some fresh longs coming about. The stock moved about the 100-day moving average. In fact, 30% higher, by the way, in terms of open interest build-up. The volumes in the cash side too have been higher, which is an encouraging sign. If you look at that's the white line, which is projecting today's volume vis-a-vis the average volume of the last 20 days, which is being projected on the blue line. Let's see how the delivery data pans out for this one. And PVR is the other one. Second straight day of long positions are being seen here. In fact, if you look at this counter, it's up 4.5% for the week, and it's trading above its 50 and 100-day moving average. Long seen here, though the futures trade at a discount. And the last one I have is Wipro, which is the top loser in Nifty. The stock's down 8% in last 6 sessions. Today, particularly, it has slipped below its 200-day moving average, and the futures are suggesting even at current levels, Wipro is witnessing some fresh shots. The counter is down about over 2% in trade.
Okay. Let's talk about some key stocks which will be in focus. IndusInd Bank will kick off the banking sector earnings today. More importantly, the private lender is expected to report consolidated numbers with Bharat Financial post the merger completion this month. Shefali Malik is standing by to talk about the key things that one should watch out for. Shefali, good afternoon. We were talking about this in the morning, and let's also try and figure out where the surprises could come from. But first, the basic numbers. What's anticipated?
Well, the basic numbers, the net interest income figure is seen at about 2850 crore rupees. It's expected to go up by about 34%. Profit is seen at about 1235 crore rupees, so a growth of about 19% on a YOY basis. If we have to look for any surprises, then on the higher side, we can expect that profit number to be around 1350, 14 odd crore rupees. That is the higher end of the street expectations. And where the surprises could actually come from, always the swing factor, which is the provisioning figure, that will be the key figure to look forward to. And we'll also obviously look forward to the asset quality basis, which we'll see the what kind of provisioning the bank actually makes. So asset quality, so last time the bank had said that the exposure to some of the stressed names, 3 to be precise, one infrastructure, one media and one diversified group, it was about 1.9% of the total book. They had not done any provisioning so far on these 3 accounts, as all these accounts were standard in their books. So what has happened to those accounts, because in last quarter, that is a quarter which has gone by, we've seen a couple of downgrades for some of the entities which I just spoke about. So whether the treatment has changed in their books as per their payment schedules, and hence the provisioning. So we look forward to that very closely. And other than that, we look forward to the margins figure because of the merger, because of the merged numbers that will be reported. The expectation is that the margins figure will go up substantially, purely because of the fact that the Bharat Financial book is a high yielding one. So that's one thing that we look forward to. Some of the other figures, we look forward to guidance on credit costs. Despite all these stressed names, the management had guided that the credit cost cost will remain below 60 basis points. So whether the management sticks to that or raises that guidance, so that will be a key figure to look forward to. Some basic numbers: loan growth 33%, deposit growth about 28%. Treasury gains are expected to boost the other income. So these are some of the numbers that we'll be looking forward to.
All right, Shefali, thanks very much for that. And the other one actually is ICICI Bank, which is in focus because Kotak Institutional Equities has maintained its buy rating on ICICI Bank, but has also raised its target price to 510 from the earlier 460. Shefali, take us through that as well.
Well, it's an annual report analysis done by them, and on the basis of that, they've raised the target price as they really liked a couple of factors reported by the bank. They're saying that balance sheet has become stronger. The business is broadly back on track. The asset quality concerns have largely abated, or rather abating rapidly, and the focus is shifting towards ROE improvement or normalization. So going forward, we can expect the bank to deliver normalized return on equities by FY21. And some of the factors basis which they've upgraded the target prices: best-in-class liability profile, loan growth which is steady and stable, negligible risk in corporate portfolio. That is the key thing to note, and also the fact that the valuations remain inexpensive. So the target price has been raised from 460 to 510.
All right, Shefali, thanks a lot for bringing what to expect from IndusInd and also an upgrade coming in for ICICI Bank. Moving on then, the second largest IT company in India, Infosys, also a heavyweight on Nifty, will become the second to report June quarter earnings today. The tech giant is expected to report steady revenue growth. I think we'll also be getting IndusInd numbers in a while. We will tell you what Shefali just highlighted for us, by the way, what the street was expecting. We'll get all the details for you with regard to those numbers, but the numbers may not have come down, but I think the street's already reacting to it. The stock's down about closer to 0.5%. Remember, ahead of the numbers yesterday, the stock was up about 3 to 3.5%. As Shefali clearly highlighted, I think the street will be watching out for the provisioning number if we have any more details.
I think we've got the net income number that's at about 1430 crore rupees. So that was expected at 1235. So that has gone up more than expectations. We've got the gross NPA number also, which has come in, and that is at about 4.3%. Remember, obviously, like Shefali said, it's going to be also of interest to see what happens to the NIMs, the margins. Q4 of FY19 was 3.59% because of the high-yielding business of Bharat Financial. This quarter, NIM is expected to come somewhere closer to 4%. But we will have to wait and watch. I think there's a correction there. IndusInd Bank gross NPA is at 2.15%. So that is much lower than the earlier number, I think, that Bloomberg had flashed of 4.3%. Much better on that count. But the stock doesn't seem to be doing a whole lot much right now. Wait and watch for what the loan growth number is also, because that seemed to be at the steady 33% along with deposit growth of 28%.
Yeah, just so
it's come up then.
Yeah, those are the numbers. I think the stock would recover. So just be careful when you read these numbers, because there is also this merged entity. So maybe there could be some restating of the past versus the current as well. But if indeed the loan growth is 33%, as Devina highlighted, then that's a good number.
No, that is the expectation.
Okay, that's the expectation. Okay, and we're waiting for the NII growth as well. That number on a standalone basis is expected to be 34%. Profit numbers standalone expected to be 1235. The 1430 number that the agencies seem to be putting out, let's wait and watch and see if it's a merged entity or otherwise.
We've got the release here. The net NPA is at 1.223 versus 1.21, which was in the previous quarter. I'm comparing it sequentially here. The gross NPAs are at 2.13 versus 2.10. So marginal improvement definitely seen when it comes to the gross NPAs, but net NPAs seems to have moved higher. I think Shefali was highlighting the provisions number, which would be really important. 430 crore is the provision that the bank has made for the current quarter. Last quarter, that's the March quarter, the provision numbers were 1,560. So it's lower than the last quarter. That's the provision numbers. The stock has corrected. I think we'll watch out for the deposit growth, loan growth, and the NI that's flashing on the screen is up about 34%.
Yeah, so that is come in probably better than street expectation. But the provisioning number, like even Shefali had highlighted, they're obviously looking at a total provision when they're looking at it, a provision coverage ratio of 43%, which is much lower than the industry average of 70%, and they've provided for much a lesser number than last time around. So what happens to those 3 accounts that Shefali was talking about, one from the media space, one a housing finance NBFC, and one a conglomerate? What have they done to those accounts in terms of provisioning numbers if the provisioning number itself has come off so much?
Yeah, I think those questions would be pertinent for Romesh Sobti to answer, and I think at 2:30 you'll probably hear from the management, 2:30 or 2:45, so all those questions will be posed, but on the face of it, the numbers don't seem to be wrong. Now, keep in mind, from a stock perspective, it's rallied a bit from those low levels. So how much of a beat is this? The net profit number at 1423 crores is a question that people would want to ask. Let's just give these numbers a bit of a chance. Okay, I'm told, let's get an expert who can probably throw more light on what she makes of these numbers. Anusha Raheja of LKP Securities is joining us on the phone line. Anusha, thanks so much for joining in. The NII growth is 34% at 2,844 crores. The net profit numbers as we have right now, and I believe this will be the merged numbers, are northwards of 1,400 crores, 1,432 crores. These are the 2 numbers that I have right now. The asset quality too has improved marginally, and the provision numbers have come off. These are the 4 numbers at 430 crores. What do you make of these numbers?
See, basically, Bharat Financial run rate of quarterly profits is around 300 odd crore, and so if I strip that off, IndusInd Bank's PAT should be closer to around 1,000 to 1,100 odd crore. So that implies closer to around flat sort of growth. So more importantly, the gross NPAs has remained stable on Q-on-Q basis, but majorly it had exposure to a couple of large accounts, which were troubled, companies like Jet Airways, SL Group, Reliance ATG. It looks like they haven't recognized anything, on that side. So we need to watch out for that, what's happening on that space. Otherwise, it looks that, at NII, the growth is strong enough, but the numbers are certainly not comparable on YOY basis, because this quarter is the merged numbers for Bharat Financial and IndusInd.
The other point, and like you rightly said, the provisioning numbers is something that is going to be of much interest as to what have they done to those ailing accounts, which were standard accounts last time around. And there was one brokerage which suggested that the ILNFS account will be provided for from 70% to 100%. Now, whether that has happened or no, that is also something to watch out from Mr. Romesh Sobti's commentary. What is it that is going to be of most interest to you, Anusha, when we start hearing from the management?
Okay, so basically on the ILNFS, the total exposure was around 3,000 odd crore. 2,000 was on the holdco and 1,000 was on the SPV. On the holdco, they had provided 70%, and on the SPV, they had provided, 25% odd. So I guess incremental provisioning on and rest 1,000 odd crore, they had written off the loans. So incremental provisioning on ILNFS was not supposed to be there. There in this Q1, I guess. So whatever the NPAs, ideally that has come, I guess it has come from, not from this account, but from, that could have been other normalized slippages.
Anusha, but were you expecting a higher provisioning number, which is coming at 430 crores? You were expecting a higher figure. Anusha, stay on. We've also got our in-house analyst, Shefali, joining us with her take on what the numbers are currently indicating. Shefali, any thoughts on the loan growth number? Have you managed to get that?
I've not managed to calculate that as yet, but other than that, the numbers are looking largely in line with the expectation, especially the net interest income figure. The net profit is looking slightly on the higher end of the street expectation at about 1430 crore rupees. That's primarily because of the fact that the provisioning is much lesser than what they did in Q4. So now it's at about, in this quarter, it was about 430 versus about 1560. So the expectation was that they will see some recoveries in this quarter, but what kind of provisioning has been done with regards to some of the stressed names, that commentary is needed from the management. Operationally, if you see operating profit before provisions and contingencies, that number is looking very good in this quarter. It's about 2590 crore rupees versus about 1911 on a YOY basis, which is not really a comparable. And even on a quarter-on-quarter basis, it's about 2067. So this higher number probably could be because of obviously the merger, but still it's looking to be good. Other income, there is a bump up of about roughly 100 crore rupees on a sequential basis and 300 crores on a YY basis. That's because of the treasury gains. NPA figures are largely in line with the expectations because for the merged entities, the gross NPA looked like around 2.15%, which is something which they've reported in this quarter as well. So the numbers look largely stable as far as the headline asset quality is concerned. The capital adequacy ratio is about 14.9%. So the expectation was that with the higher capital because of the Bharat Financial merger, they'll use some of that for making extra provisioning. That has not happened in this quarter. So probably they'll do that in the quarters to come, and even the overall effect of the merger will probably reflect in next 1 to 2 quarters what they actually plan to do with the same. In this quarter, no such benefit of the merger is getting reflected. I would like to see the margins figure, but that is not there in this release. So we'll keep an eye on that, and along with that on the loan growth and deposit growth as well.
All right, Shefali, stay on with us in case you do want to, ask a few questions to, the experts that we're talking to. Lalitabh Srivastava of Sharekhan is joining us on the phone line as well. We don't have a margin number yet, but the expectation was that with Bharat Financial's high-yielding book, you would see an expansion of NIMs to about 4% from the earlier 3.59%. And also, what have you made of the initial numbers for IndusInd Bank, Lalitabh?
Yeah, initial numbers seems to be much better than expectations. As you have pointed out that due to the merger impact, there were some benefits expected because Bharat Financial book was coming in at a fairly high amount of margins, around double digits, whereas IndusInd per se had seen some impact of one-time slippages last quarter. So that is why the NIMs last quarter had been impacted. So overall, this quarter profit numbers and provision numbers seems to be fairly better than our expectations. Other income part, we believe that it would have been helped by the treasury gains, and it will be seen with most of the other banks as well.
Lalitabh, any thoughts on the loan growth? Did you manage to look at that number?
No, I do not have the loan growth number with me. But interestingly, this quarter also the bank has seen some amount of asset slipping to NPAs because on a larger base of the loan growth, the gross NPA numbers is slightly higher on a sequential basis, around 5 basis points addition, whereas we were expecting gross NPAs at least to hold at this point of time. So we'll have to see what has actually happened there. But overall, seems to be a fairly decent set of numbers.
Lalita, what's your take on the kind of provisioning that they've done? It's just to the tune of about 430 crore rupees, substantially lower than what they did in the fourth quarter, considering the fact that they do have exposure to a couple of stressed names, and the expectation was that with Bharat Financial Capital also coming in, they'll actually beef up that number. But that has not happened in this quarter. So what's your take on that?
Yeah, so it was last quarter there was a large account that had slipped into NPA, and that is why they had taken a higher provisioning. We do not have the numbers here right now, but last time SMA1, SMA2 was also fairly low at around 30 basis points for both SMA1 and SMA2. So it will be interesting to see what has actually happened this quarter, wherein your NPAs have moved up, but your provisions have remained lesser than expectations.
So Lalita, I have a follow-up question. One of the big concerns regarding IndusInd Bank has been whether the bank has given a realistic credit cost guidance of 60 basis points. And if you remember just a month back, another brokerage house, UBS, it put out a report saying that going forward, one of the big concerns for both Yes and IndusInd could be the exposure to the network group companies rather than an individual company, an individual large company. So what do you make out of that? You think that the bank is making adequate provisioning, and going forward it will be able to meet its credit cost guidance?
See, I'll not be able to, comment on other brokerages' estimates. But for the bank, at least, we believe that we are expecting their credit cost guidance to be somewhere around 100 basis points for this quarter. That is what we are working around. Certainly, this time the credit cost performance seems to be very much in line with what the bank had guided.
Okay. Anusha, a question for you. What is your take on their CV portfolio? Do you think that because of the ongoing slowdown in the auto sector, they are likely to see an impact, if not in this quarter, in a couple of quarters to come? Or do you think some of the other positive factors will play out, such as pre-buying ahead of BS4 transition that is expected to happen in FY20, and also increase in the bank's market share from NBFCs? All these factors are also going to help the bank going forward?
Yeah, on the CV portfolio side, definitely, they will have some impact of that. But overall, they will manage to grow 20% plus. That is there. The growth is not an issue for them. But more importantly, the things that needs to be watched out for that, some of the troubled companies' exposure that they have, other banks have already provided for that, and they have recognized that as an NPA in Q4. So why is that IndusInd Bank has not yet recognized that? So that I guess will be one of the concerns. So also the provisioning is less this quarter. It might incrementally be on a higher end in the coming quarters. That is one of the concerns, I believe. So overall, growth and maintaining margins not an issue. The more problematic concern is on the future NPAs that might come in. So although the operating profit growth might come in, but at the PAT level, we might see a muted sort of, the provisioning would be on a higher end. So on the whole, for FY20, we are expecting 120 basis points, credit cost guidance versus management that has guided for 50 basis points. So what we believe is that it could be much higher than what they have guided for. So overall, broadly, our call on the bank is, it will be market performance.
Okay, Anusha, Lalita, thanks so much for that. Let's get across to the management.
You got the press release? Okay. Good afternoon. Welcome once again to this quarterly declaration of results. I think the headline for us is the completion of the merger. The long-awaited merger finally crystallized and came into effect from the 4th of July. Because it was a material event, after 30th June, the results got consolidated, and what we have presented, what's been uploaded on the sites is the consolidated limited audit results of both the entities put together. And I'm very happy to welcome Mr. M.R. Rao, who I'm sure you have met in his past avatar as CEO and MD of Bharat Finance, who sits on my left, to the management team of IndusInd Bank. And I'm sure during the course of this thing you will have questions that we'll be more than happy to answer. So the merger process is complete. The shareholders of Bharat have been allotted the shares of IndusInd Bank. And as of today, those shares are also trading. So we, in record times, have actually achieved the trading of the shares of the new shareholders of IndusInd Bank, who were erstwhile shareholders of Bharat Finance Limited. In terms of the results, I think quarter one has been marked by strong quarter-on-quarter growth and year-on-year growth, both consolidated and, of course, standalone numbers. The consolidated PAT growth is 38%, and the total PAT that we have declared is 1,433 crores. This is against the 336 crores of PAT that were shown in quarter 4 of last year. So I think all lines have moved up. Net interest income has moved up by almost 34%. Fee income has grown by 28%. Total revenue has grown by 32%. So pretty strong quarter in terms of headlines. And of course, the balance sheet also has grown nicely. We have a 28% growth of the consolidated balance sheet. And if you look at standalone, then IndusInd is at 26% growth. And we've had another very strong quarter on deposit growth, which followed by the 29% we showed in quarter 4 is now 26%. And within the deposit growth of 26%, retail fixed deposits have grown very robustly at almost 42%. We can go into individual numbers, but I'll give you headlines. The merger has contributed into a much stronger capital adequacy for the bank, which, if you include the quarter 1 results as well as the promoters' preference capital, which came in actually on 4th of July, is now nudging 16%, 15.8% to be exact. And before quarter 1 profits, I think last quarter, I think it was in the range of 14.28%. So there's a pretty strong bump up in the capital adequacy that has happened. I've already talked about revenue growth, 32%, NII growth, 34%. The core fee that we always define has also grown by 20%. The cost to income ratio has actually fallen from the 44% that we normally show to 42% as a consequence of this. There's a 2% drop in the cost to income growth. If you look at the growth vectors, then amidst all the news that you hear about slowdown in the passenger vehicle segment, our vehicle finance businesses grew by 24%. And this was a pretty secular growth. It was spread across commercial vehicles, two-wheelers, three-wheelers, utility vehicles, tractors, off-the-road vehicles, etc. Very, very secular growth. And that's happened because we have taken solid market share. So that's a stellar performance which is coming from our vehicle finance businesses. The 26% growth in loans is mirrored by almost a mid-25s growth in the corporate book, 24% growth in the vehicle finance book, and in the 20s, the growth for the non-vehicle finance book as well. Other than that, I think what has been talked about most in the market is the quality of the loan book. The quality of the loan book is absolutely stable. Our net credit cost came at 15 basis points, which is well in line with our overall ambition of keeping it in that 60-65 basis points range. So I think we are back to the business as usual as far as credit costs are concerned. Accompanying this is probably one of the smallest and the lowest books that you have on the structured book. That is only, I think, what, 5 basis points? Structured book, 8 basis points. 8 basis points. The restructured book is only 8 basis points. We did disclose for the first time, I think, SMA data last quarter. We are happy to disclose SMA data. Maybe we should show you that. We, I think, were amongst the first to disclose SMA data sector-wise, and we will show it again this quarter. Last quarter, I think we had shown SMA2 as 0.32%, very low, and this quarter SMA2 has actually come down to 17 basis points. Even SMA1 is down to 18 basis points. I think we are showing definite improvement in the SMA figure. I think the SMA data is a fair indication of what actually happens in your books. And so I think all the speculation that has been happening around what you have in the books and what is bubbling and what is not bubbling is sort of put to rest if you look at the data, not this. No, the sectoral SMA data. Yeah. So that's the data, the sectoral data. And if you see that in none of these you're showing any sort of I think overall, as I said, SMA1 18 basis points, SMA2 17 basis points, and that too is spread across some 48 accounts. So there's no concentration risk that a lot of people have been talking in the market. The other part of this thing is on customer acquisition. Customer acquisition, the overall customer base is now at 21 million customers, and we onboarded during the quarter 6 million customers. That's right. Now that's largely because of the Bharat Finance inclusion within the results. What is happening there, I think, is, and MR will talk more about it, is that each one of those 7.5 million active borrowers in Bharat Finance is being attached to a savings bank account. So we are putting a whole lot of, and this is completely paperless, digitized opening of savings bank accounts. So the entire 7.5 million by the end of the year or financial year, hopefully, will have a savings bank account behind it. The rate at which we are opening these accounts are between 40 and 50,000 accounts per day. That's happening. So that's a pretty rapid sort of savings bank initiative that we have launched in the rural areas on the back of the large base that Bharat Finance has. So the overall customer base is 21 million. The branch opening initiative has continued. We have crossed 1,700 odd branches, and I think we are well on target to get to our 2,000 figure by March of this thing, including what we call banking outlets. We have 65 of those banking outlets already. So that's a summary of this thing. In terms of the Bharat Finance businesses, we have seen a AUM growth of 26%. And that's essentially, maybe you will have to try the sort of approach we are taking, especially in a couple of states where we have actually slowed down cautiously.
Thank you, sir. So two topics I'll speak about the AUM growth and the savings account piece. While we grew 26% year on year, the quarter on quarter growth has been kind of flat. Essentially because we took a conscious decision to tighten the lending norms in a few states because we think that there's some overeating there, especially in the states of West Bengal and Odisha. So we on our own tighten the lending norms and the criteria that we typically apply. So therefore there has been a dip in the business in this quarter. However, the customer acquisition, fresh customer acquisition continues to remain good. We have acquired about 8 lakh customers in the quarter one, and typically the first quarter is a dull season for microfinance business. The ramp up starts happening from Q2, Q3 onwards. On the savings piece, I think one of the biggest reasons for the merger is that we'll be able to provide the total financial inclusion services to the borrowers of the rural space. As a NBFC MFI, we can just address their borrowing needs. But with the savings account, we are giving the borrowers an opportunity to park their small savings, whether it is 10 rupees, 50 rupees or 100 rupees in this bank account. And we are creating a network of Bharat Money Plus stores where the customers can actually go in and do their cash in and cash out. It's a human ATM equivalent in the rural space. We've got about 3,000 stores now in different villages in Odisha and Karnataka. And to our pleasant surprise, it's just not only the borrowers, but the non-borrowers are also using this to cash in and cash out from their saving account with other banks. So I think that's the way forward for us. We are also encouraging our borrowers to park their small savings, because with these Kirana stores near their residence, hop, skip and jump, they can go and park their whatever surplus money they have instead of keeping it in their house. The whole savings account opening piece is a 30 seconds to 1 minute process. This is entirely paperless and is based on Aadhaar. And as Mr. Sobti was alluding to, yesterday we opened 44,000 accounts. And pretty soon, I think in the next 1 week or so, we'll start hitting a run rate of 1 lakh saving accounts per day. That's it from my end.
Thank you. A little bit about, I think, markets. There's a lot of discussion around markets on what's happening on credit markets. So as far as the deposit growth is concerned, I think that's remained stable at around 10%. But the market, I think, credit growth has sort of come off down to around 12%. I think the major feature of the banking markets is really in the money markets, where we have certainly seen a sharp decline now in the cost of deposits, which actually peaked in April and May. And so I think this quarter was probably the highest cost sort of as far as deposits are concerned, especially in our book. But we have seen in the month of June, rates come off by between 40 and 50 basis points. CD rates are certainly down in the range of 40 to 50 basis points. So we certainly see that as a positive for us. 50% of our book is a fixed rate book. And since if the rates fall, which hopefully we will benefit from in Q2 onwards, then I think the margin expansion is certainly seen hopefully in our book as well. So if you notice that the NIM for the combined entity crosses 4%, 4.05, and I think our given the scenario that we envisage as far as deposit costs are concerned, I think there is room for improvement of this margin up by at least 10-15 basis points over the next 2 or 3 quarters. As far as so there's a lot of discussion around stress in the market. Our view is that apart from the known sectors, we know, everybody knows NBFC, real estate sectors, a little bit on renewables. I think the stresses would be more company specific than I think segmental or sectoral specific. In our book, certainly I think we are not seeing in areas like, for instance, vehicle finance, we have absolute complete stability. While we grow, our quality of the book has remained absolutely rock stable. The microfinance book is absolutely rock stable. Our gem and jewelry book has 0 delinquencies and almost nil overdues. So I think in the sectors that we operate, by and large, we are seeing stability. And as I said, segments where the stress has appeared for the market as a whole are now broadly, by and large, already known. But as I said, credit growth has come off down to 12%. Our book has still grown at 28%, partly because of the addition of Bharat Finance, but on a standalone basis also 26%, and it's spread out across, as I already told you, several sectors. Anything else that we need to add? Right? Happy to take questions.
Before we take more questions.
Yeah, slippages are either stable or down. And if you compare Q4, of course, they are massively down, because Q4 was huge as we made a provision for this thing. But overall slippages are now down to 1.5%. Actually, they are even lower than what they were almost a year ago. So quarter on quarter, of course, there's a dramatic this thing, but that's not really a fair comparison, because Q4 was a one-off as a consequence of the large provisions that we made on ILFS. So slippages are absolutely steady or slightly down.
The write-off recovery figures as well?
Sorry?
Write-offs and recovery figures?
Yeah, write-offs, we made that one large write-off in Q4. So there are no write-offs in this particular cover. And recoveries, there are good recoveries from the asset reconstruction business, the ARC sales that we have made, and some recoveries have also happened within the other portfolio that we manage ourselves.
No, I can add to that. So the slippages are 1.5. The net slippages are 0.5. So the 1% is the recovery. Yeah.
Sorry, just to add to that, you were hoping to recover from IL&FS accounts, your exposure to IL&FS this quarter. What has been the progress on that front?
No, I don't think we ever said that there will be a recovery in this quarter, because we made a provision only last quarter. But we had said that there is a program for sales of assets that IL&FS has pursued, and a number of assets were put on sale. We understand that in July or later or earlier in August, that these bids are going to be opened, and then these asset sales, the buyers should be established by then. So I think it's going to take a few months before we have a absolute a sort of fix on how much recovery will come. And the recovery is going to happen firstly, I think, out of the SPVs, which is the operating companies. And as we always said, that we have a very large operating asset which has been earning annuities, which probably will be one of the first to be actually sold. And we have reason to believe that the sale proceeds will be sufficient to by and large cover the debt that stands against that thing. So I think the recovery process is on, because the bidding process, I think we are aware, the bidding process is on. Whether it's closed or not, I'm not very sure. But I think in the next, 4 weeks or so, a month or so, we should know the outcome of the bids that have happened. And I think then we sort of establish the extent of recovery that we'll have.
Okay, that's IndusInd Bank talking about a number of things. The stock not going anywhere really. Let's move on. The market at large has come off completely, so that's the more important thing to focus on. Flattened out completely. The Nifty 11,581. The Sensex and the Bank Nifty too have just come off quite rapidly. Good time to get in our experts on board. Abhijit Phatak of Definedge Solutions with us on the show, as is Vinay Rajani of HDFC Securities, who will be joining in. Gentlemen, good afternoon. Thanks for joining in. Abhijit, to you first. It's volatile in its own mild way, but no big changes that we're seeing. How are you viewing this afternoon of trade, and what does that lead you to? What's the trading recommendation?
Good afternoon, Neeraj. Market is range bound as far as Nifty spot is concerned, between 11,450 and 11,600. And I was waiting for a close above 11,600 to go long, with a stop loss below 11,550. If it closes above 11,600 on the spot, one can go long, and I'm expecting about 11,750 sometime next week.
Mm-hmm. And is that the call on the Bank Nifty as well, Abhijit?
Bank Nifty is a bit more tricky. There is a big resistance near 30,800, 30,900. So right now I would like to stay away from Bank Nifty and concentrate only on Nifty.
Vinay, what would your take be on the indices this afternoon? And probably, since this is the end of the week, you're going to focus more on the next week and how to take a trade forward thereon.
Yeah, good afternoon. See, Nifty has been trading weak. In the intraday, we already seen 70 points correction from the day's high. My advice is to hold Nifty longs with a strict stop loss of 11,500. There are multiple evidences which are projecting a strong support around 11,500. First is the gap which was formed on 20th May 2019 as a reaction of the exit poll outcome, and that gap was in the range of 11,426 to 11,591. So this is a gap in which we have seen Nifty taking support, and there is a upward sloping trend line on the daily charts. There is a 100 days moving average support around 11,500 odd levels. So these are the evidences which are giving a strong feeling that it should hold this level. So whatever long positions traders are having should be held with a stop loss of 11,500. In case Nifty breaks 11,500, then we can expect Nifty to slide towards the next support, which is it's nothing but its 200 days moving average support placed around 11,110. So around 300 to 400 point correction we can expect once we see any level below 11,500. So after the budget, we have seen that from the high of 11,982, it has slided to 11,461. So more than 500 points correction we saw after the budget. So if we look at the retracement levels as a resistance, 50% and 61.8% retracement of this entire move post budget gives a strong resistance at 11,720 and 11,780. So until and unless we see Nifty closing above 11,800 to take a round figure, we should not be bullish aggressively. Until then, we can adopt a strategy of sell on rallies. So my view is that unless and until we close above 11,800 in Nifty, we should not take aggressive longs. In fact, we can take a strategy of a sell on rallies. So whatever long positions you are already holding, keep a stop loss 11,500. If that breaks, you should cut the long positions in Nifty.
Okay. Just very quickly before we move on to the specific stocks, just want to mark, I think IndusInd Bank is down about 2%. Amongst the things that they've stated, three groups rumored to be stressed in media, housing finance and diversified are standard in our book. So it's a repeat of what they've said in the past, of course, but seemingly they haven't done any kind of provisioning for that, and that could come back in the future. I guess that could be probably one reason why IndusInd Bank just very quickly has come off a little bit. Abhijit, your specific stock recommendations, but a word on IndusInd Bank. A lot of people trading this one. How do the charts look today?
IndusInd Bank is not actually weak on the chart. In fact, it has started a good pullback rally, and as long as, I mean, on a longer, slightly broader time frame, as long as it is above 1450, it can still go up, and I'm expecting maybe 15, maybe around 1600 in the next couple of weeks.
Okay, in fact, the markets too have come off. We are down almost 60 to 70 points from the day's high right now. Nifty is trading with cuts of about 22 points. Remember, 11,550 was the support which we were looking at. Let's see if that gets breached or not. All right, let's bring in our fundamental guest on the show then. Gurmeet Chadha of Complete Circle Consultants joins us now. Hi, Gurmeet. Good afternoon to you, and thanks a lot for joining. First up, your take on IndusInd Bank's number, clearly highlighting they will be maintaining the credit cost of about 60 to 65 bips, which was a concern highlighted by a few brokerages in the past, and also stating slippages. The net slippages this time around have come down to 0.5%, which meant they have recovered almost 1%. But still, provisions on the lower side continues to be a concern because they've not made complete provisions of the stressed exposure that they still have to certain sectors. Your take on IndusInd's first quarter numbers?
So, mixed reaction, Navneet. I think I was, as you rightly pointed out, I think the street, see, you are in a market where more, transparency in stress assets, more provisioning would actually be positive. And what we probably saw, while they took great pain in, explaining each sector. So I'll talk about the positives first. So what I liked about was even in the loan book, which grew, or the balance sheet grew on a consolidated basis, they also made a distinction between what's the addition because of the merger. And so the details on the vehicle finance was positive. The core fee income went up 20%. That was positive. I think also they made it a point in terms of, differentiating the loan book, how much is SME, which parts are stressed. So they went into great detail. And because the stock has been under pressure, and probably, the commentary was reflecting that. Also, the fact that their 50% of the book is fixed fee, and they highlighted how the falling yields in money market and CDs will have a play in NIMs expanding, I think is well taken. I think as I said, but I was a little disappointed. They should have probably done more provisioning as far as, the LFS is concerned. Also, I think more details on the operating asset would calm down the nerves. So he did without mentioning the asset. He spoke about the annuities. So I think some more provisioning would have helped, and the stock had run up a little bit, leading to the results. So some profit booking was normal. So I would not be a buyer right now. As I said, I would wait for more things to pan out. There are better plays. There is Axis Bank, which is raising funds, 9,000 crores. Currently on a consolidated basis at 2 book value, with the growth levers can possibly make it to 3 book value. There is Icici Bank. There is HDFC Bank, which is unaffected by the new NPA cycle, which will kick in, whether it is ILFS, JET, Cox and Kings, and a new set of names. So better to be there rather than take a call right now.
And IndusInd Bank, remember last time when it reported its Q4 numbers, somewhere towards the end of May, from a low of about 1387, it closed at about 1518 on that day, and post that somewhat flattened, and now I think it's come off from those levels. So you take a look from quarter to quarter, probably the price has not done a whole lot much. But individual stock ideas from both our technical experts. Vinay, come to you first. What are the stocks that you're recommending?
Yeah, my first recommendation is the PSU Bank, SBI. We have seen SBI in the existing month only. It registered an all-time high around 373, and after that it saw some running correction, and again it is resuming its uptrend. So I think it is one of the strongest stock, and it has given a breakout on the long-term consolidation. On if you look at the quarterly and monthly chart, it has given a clear-cut breakouts. So after a long consolidation, this 350 was a strong resistance, multiple tops on the monthly charts, and it is sustaining above 350 resistance. So it's a good sign, and I think it is good for the investor also. We can expect long-term targets also on the upside. So as a trading strategy also, one can go along around this level. Stop loss can be kept at 351 odd levels, and target can be kept at 385. So there are higher tops, higher bottoms, and multiple resistance crossover, and moving average setup is positive, oscillator setup is positive. So I'm recommending going long in SBI at current price, and the stop loss can be kept at 351 and target.
Yours. Okay, Vinay, thanks. We seem to have lost your audio, but SBI is a buy call. Abhijit, what about you? Your stock ideas?
Yeah, I have also two longs. One is Reliance, which has been quite strong over the last few days, and as long as it is about 1270, it can be bought with a stop loss below 1270. I'm expecting 1300, 1305, and if it crosses 1305, it can go towards 1330, 1340. And another stock which is weak over the slightly wider term, but it is showing a pullback rally, which is Maruti. Right now it is about around 6,000 on the futures. If it with a stop loss below 5940, I'm expecting Maruti to go up by about 200, 300 points in the next few weeks.
All right, there is a call coming in on Maruti. In fact, Gurmeet, a quick word on the auto space now, and Maruti in particular, sub 6,000. Is it a good buy?
But I think probably we'll wait for maybe a month or so and let the numbers pan out. I think if you see the number of units sold have come down from 170 to 110, and that's a big drop. My conversation with a lot of clients who happen to be dealers are not very encouraging, both in terms of the inventory levels. There is genuine stress as far as the working capital is concerned. So my view is, probably a few launches. So it's become probably. I also think that one factor which hasn't been discussed too much is lack of new launches and innovation. If you see the MG Hector, the waiting period is already 4 months. The new SUV from Hyundai has already 25,000 units booked. So I think maybe with a lag of 1 or 2 months, one can probably get into it. But a large part of the pain is in the price. Also, I think this migration to EV, which a lot of experts have been talking about, could eat what impact it has on margin also remains to be seen. So stay neutral on it. I mean, don't be overweight on Maruti. Some of the auto ancillaries probably you can start accumulating. On this, because Sundaram Fasteners being one, we saw Endurance, for example, last year had bulk of the orders coming from Bajaj. This year they've managed to make it up from the new plant of Honda. So they are more agile, they are more quick in terms of forging JVs, basically the requirements of the OEMs. And we have always spoken about rising content per vehicle being a more secular theme. So maybe get into auto ancillaries once, on dips, and then maybe get into PVs and CVs a little later. Maybe wait it out.
Before we thank you, a quick word on the sugar names. All of them are very active today.
Is it for me?
Yes, Gurmeet.
Yeah, sorry. So, Neeraj, I think I would want to basically. I think it's if you see the ethanol story, that's what keeps sugar names busy. But very difficult to take a fundamental view on them. Might as well be interested to look at TVS with this Apache launch of the ethanol based, and what impact it would have in terms of the. We heard Nitin Gadkari talking about urging TVS and other companies to come up with 3-wheelers which are ethanol based. So maybe you can look at some of the auto names with respect to that. Sugar would be more from a trading perspective, and I'm not a great expert on that. Maybe you can have a trading range on it, but difficult to take a fundamental view on the sugar stock.
Okay. We'll leave it at that. Gurmeet, thanks so much for taking the time out, and congratulations on being the best performing regional financial advisor in the UTI Mutual Fund Awards.
Thank you. Thank you.
All right, well, so that's the fundamental view. Our technical experts, of course, stay on, but before we get back to them, I think it's also important to highlight what is arguably the stock of the afternoon, and that is Quess Corp. Amongst the stocks of the afternoon is set to issue about 7.5 lakh preferential shares to the investment arm of Amazon for nearly 51 crore rupees. This is Amazon's second such investment in an Indian listed company after it picked up nearly 5% stake in Shopper Stop in 2017. To know more about the deal, Yatin Mota had a chat with the chairman and MD, Abhijit Icici. Listen in.
The investment is done by Amazon.com NV Investment Holdings, which is FPI and an affiliate of Amazon.com. We're issuing 7.5 lakh shares at a price of 676 rupees, which is significant premium to yesterday's closing price, amounting to about 51 crores. And the investor, as you mentioned, will hold about 0.51% of the share capital of our company. Pricing, of course, is decided as per the SEBI ICDR guidelines. So what is the background of this? You know, Amazon, as you're aware, is a large e-commerce player, sells a number of phones, appliances, etc. on its e-commerce site.
Right.
Quess owns DigiCare, which is perhaps India's largest phone repair, warranty service and appliances repair company. We presently have about 250 outlets across 150 cities, and we do about 120,000 calls per month right now. We do some work for Amazon, and in our discussions with Amazon, we are working towards a plan where we can enhance the customer experience of people who are buying phones and appliances on Amazon site. And we expect to go up from about 250 outlets to about 450 outlets across 300 cities, build a technology platform, invest in training, etc., to be able to reach the service quality levels that's expected at Amazon. So all of this has an investment requirement, which we estimated together to be about 50 odd crores, and that's the capital that's come into our company. The capital came in primarily at the parent because as an SPI, they cannot invest into an unlisted sub, which is the case with DigiCare, and therefore had to be routed into the parent. The objective is therefore to partner with Amazon to be able to build a business which meets with the customer experience requirements of Amazon customers. So that's the summary of the transaction.
Okay, sir, tell us more about this mobile, repair and support entity. You said that you will, wanted to scale it up from 250 points to almost 400 stores. So, will the 50 crore capital be good enough for this particular expansion, or moving ahead also, both the partners Quess and Amazon are committed for this subsidiaries expansion and penetration moving ahead, especially to do with the mobile purchase online?
So based on the discussions we've had and the plans made so far, this amount of capital is sufficient to meet with the growth requirements of the company. If we need capital in the future, we'll address that issue at a later point of time. But as of now, this is the number that we need.
Okay. And sir, as you mentioned, since Amazon was not allowed to directly invest into your unlisted subsidiary, is the partnership of Amazon limited to this mobile entity, or together with Quess there are other opportunities also that you would like to explore in the future or in the near term?
So we work across Amazon in other service areas and lines too, but this investment and this partnership is restricted to DigiCare as of now.
Okay. And sir, as far as your core business is concerned, recently there were a lot of investor concerns regarding receivables. Was there any concern flagged off by Amazon in between the transaction? Of course, it's reflective of the fact that the transaction happened at a substantial premium. But do you think all of these concerns and the kind of investment that you've got from Amazon reiterates the fact that you are confident of business prospect both at Care as well as at the parent level, which is Quess, moving ahead?
Sure. So if you look at the parent itself, we did about 465 crores of EBITDA last year. On an average, we've been growing. If you look at historical data, we've been growing by about 40-odd% year on year. Even if you don't take that number, if you take a much lesser number, we expect to grow significantly from the 465 crores of EBITDA. Our cash conversion rates in the last 2 years have changed. We were initially at about 30%, and now it's gone to about 43% last year. In the last quarter of the financial year, we closed in excess of 50%. So if you take a 50% cash conversion to our EBITDA, we will generate significant amount of cash in the company. Our debt levels have come down by 200 crores. So our financial parameters are indicating otherwise. And we think that we have enough liquidity to support our growth. None of this came into our discussions because essentially this quantum of money that's coming in is a very small percentage of the revenues of the company. We are sufficiently financed, and we don't have any balance sheet concerns at this point. Our concern, if any, is at a project implementation that we're doing for the Smart City project in Ahmedabad, where we have SPV that's implementing the project. It's a 200 crore project, a little more than 200 crores. In the SPV, we have a JV partner. The JV partner's parent has gone bankrupt, which is no relation to us.
Okay.
And bankruptcy proceedings will proceed against him as per the process of law, unrelated to Quest or the JV company that we run. So we may have delays related to collection, which is usually seen in infrastructure projects in India and such government projects, but we don't see collection risk. At any point in time, if there is any risk at all, we will of course inform and make disclosures sufficiently to that extent.
All right, Quest Corp, they're up about 9% currently, but from a high of 18% has definitely come off. Quick word, Vinay, on Quest Corp, do you track this one? And at 481, what would you do with the stock?
The stock has been beaten down significantly, and on all parameters it looks weak on the chart. Today it has surged more than 10% in intraday rally. It went up to 20%. Now it is trading at 9% higher. No doubt volumes and price setup for today it is okay. It might pull back further on the upside. 525 is the next resistance I see in the Quest Corp. So this can be a pullback rally, but we should not take aggressive bets on that, as the overall primary trend is negative with lower top, lower bottoms on the charts. So I think for the coming days it could retrace back to 525 odd levels. Around that level one can book trading longs, but we should not take aggressive longs in the stock like this because the primary trend is not supporting on the charts.
Okay, that's the call coming in on Quest Corp. The counter is up 10%. The other stocks in the broader market which are doing well, and both on account of earnings. GTPL Hathway, remember, came out with the numbers, and today's the second straight day of upper circuit gains of 20% seen. Remember, subscriptions were higher, almost 47% after the new tariff order. The full impact of NTO was felt in the quarter gone by. And the other one is GNA. That's also locked in upper circuit with gains of 20%. The numbers came a while back. Margin improvement to 16%, bottom line growth of about 30%. So good earnings definitely seen from these two stocks. Abhijit, on the charts, of course, they're locked in upper circuit, but what's the upside that you see on the charts for both these counters?
Sorry, I didn't get the stocks.
GNA Axles and GTPL Hathway.
Sorry, unfortunately, I don't track these stocks at all.
No problem. Okay. Abhijit, any thoughts on the steel makers which have been up and about in today's trade, from the likes of Jindal Steel, Tata Steel? We've seen good gains, though they've come off with the markets also coming down. But would you take any bet on these stocks?
Yeah, both these counters are looking good, JSW and Tata Steel, and they have shown some action from the lows. In fact, in Tata Steel, 450, 455 is a good support. And today it has gone up from there. And again, I mean, there is a resistance near 500, 520, but this can be bought on a dip to 460, 470, at least for 490, 500. And if it closes above 510, that will be very bullish for Tata Steel.
Okay. Well, watch out also for the likes of Intellect Design as well as Metropolis Healthcare, both of which are now trading near life highs. By the way, SBI Life is the other one which has done remarkably well today, 3.5%. I think life insurance by and large has done well. The numbers, the monthly AP numbers seem to be strong for all the private life insurers, the non-LIC life insurers that is, and that's why all of them, almost without exception, at least HDFC Life and SBI Life have done very well, and it's showing in the way the stocks have done. So do watch out for those. Deepak Shenoy of Capitalmind with us on the show right now. They've done some interesting analysis on a couple of stocks. Deepak, I'm missing out the name, but we'll talk about that because I saw that tweet from you. But before I get to that, this move that we're seeing in the insurance space and third consecutive month of very reasonably strong AP growth, let me put it that way, for HDFC Life and SBI Life at least. What do you make of these numbers? Do they inspire you enough to go out and make investments here?
It's interesting. I haven't seen the numbers, Neeraj, but the premium growth I think partly comes from the fact that now mutual funds are taxed. Equity mutual funds are taxed at 10% on exit. When you kind of when you finish a 3-year period in an ELSS fund as well, versus having no such tax for an insurance company. So I was expecting that to be bridged at some point, but I guess it's not now, so they will have an advantage. We'll have to see how the mix is. I haven't seen whether the mix is more ULIP versus more traditional, but gain in premium is actually quite positive. I don't know their embedded values. We'll see when they come, but they're still trading at 3.5 or 4 times embedded values, which is relatively high in my opinion. So I'm not a buyer yet. I just feel that these prices are too high. You don't value these companies on PE because it's not earnings today that matter. It's the long-term earnings. So while I think it's good that they have a bump up in premium, I'm not a buyer. I also know that last year there was a hiatus, kind of lull in the premium growth. So there may be a base effect also involved there.
Okay. Well, fair call. Deepak, we want to talk about the outliers, we want to talk about some of the others as well, but stay on. So much more to talk about those. Before we move any further with all of that, let's find out what's made it to Nikki Mirchandani's list of the Fab 4 stocks of the day. She joins in right now with those 4 stocks, which on a day when the markets are down about 1/3 of a percent, are doing well for themselves. Nikki.
Thanks, Neeraj. Well, I'm going to start off with GNA Axis, where the stock is up as much as actually locked on the upper circuit limit, and good set of numbers reported by the company, 20% top line growth and more than 30% growth on operating performance. Strong set of numbers, clearly auguring well for the counter. Second is Balrampur Chini, which along with most of the sugar counters are buzzing in trade today on account of ethanol push for vehicles, which is probably one of the reasons. Ambuja Cement, as we saw, there is a BofA ML report which suggested an upgrade for the counter given the kind of valuation which are trading in line with the historical averages. The valuations right now are in line, and apart from that they expect the price hike have not yet reflected in the valuations, because of which they seem to be discounted as compared to rest of the peers. And last in the list we have Hathway Cables, which is trading ahead or has been trading up for 3rd consecutive session now ahead of the Q1 results. Back to you guys.
All right, Nikki, thanks very much for that. Those are the Fab 4 stocks of the day. Deepak, we'll come down to your stock ideas. Some outliers there. You like Dhanuka Agritech, you like Atul Limited. Tell us, why do you like these stocks?
Well, we don't like them. We're just looking at businesses on Capitalmind. We also look at a lot of businesses that are interesting, try to find out what's happening. So Atul's been, an outlier in terms of price performance. So some of the interesting things about the company, I mean, we've highlighted that on the post. I won't go through all of this, but these guys have been doing extremely good sales growth, and a lot of the chemicals, whether you call them specialty chemicals or generic chemical space, and partly the pharmaceutical chemical space also. The space has actually been seeing a lot of action recently. We've seen a lot of stocks hitting upper circuits, or at least new all-time or 52-week highs. And perhaps some of that has to do with an impact on what happened in China last year, but otherwise in general demand has increased substantially for them. I think going from both price performance and of the immediate past performance of the stocks itself, considering their debt to equity ratios, profitability, I think this is an interesting sector to watch out for. We're seeing price performance show up on the charts. We're not seeing stellar numbers fundamentally yet, so those still might be ahead of us. That's what we think.
Okay, Deepak, what did you make of Amazon taking stake into Quess Corp? This is the second time they're picking up stake in a listed entity. Earlier it was Shoppers Stop in 2017.
Yes, and I think there was talks about future retail as well, but Amazon's idea here is not Quess, the parent company primarily, but I think it's about QDG. QDG was an HCL subsidiary and was bought by Quess. They do after-sales service for smartphones and other white goods. And I think Amazon's purchase primarily relates to that. It's going to be a flow through into the subsidiary. And this company had a 180 odd crore turnover a year or so back. So I don't know the current numbers, but effectively what this does is probably cements Amazon's interest in that subsidiary and perhaps helps it to, helps us understand about where Amazon might be concentrating its efforts in some of the areas going forward. This may result in more deals, we don't know. But in general, it gives us there was an issue with Quess a few days back. I think their stock fell about 20%, and two items were highlighted. One was a receivable of 150 something crores from a subsidiary called Trimax. Or a subsidiary of Trimax. Trimax itself is bankrupt, but there's a JV between Trimax and Quess that is supposed to receive money in lieu of a project for the Gujarat Smart City, which was at that time supposedly suspect because it's highlighted in the annual report. But at the same time, there was also this 51 crore investment by, at that time they said somebody, and it was brought to the board and then cancelled, and people thought at that time that, oh, these guys are struggling for money, but it turns out it's Amazon, the money is not relevant, the money is for a subsidiary, so that part of the fear has gone away. So out of the 20% fall, you've covered 10%, the remaining 10% still remains because of the payment issue. But positively, looking positive, the company has done a lot of good things. They've reduced debt. They've bought Allsec, listed company recently. So that's also been done by not taking on a large amount of, or any reasonable amount of debt also. So it's primarily done through cash flows, which is encouraging. If you're an investor, you're going to have to wait 2 or 3 years at least before this shows up. It plays up on the execution capabilities of management. And I think while Amazon's entry is a good sign, it may not be the only sign that the company needs for the stock price to revive.
Well, certainly so, but for now, stock is doing rather well for itself. Let's wait and watch if it lasts. Remember, it's also a stock that has gotten beaten down so badly in the last few months that some positive announcement and there's a strong reward for that one. Anyways, let's try and figure out what's made it to, it's time to take stock of what the dealing room recommendations are. After a brief hiatus, both Yatin and Darshan are back with their channel checks. Good afternoon to both of you. Yatin, let's start off with you first.
Good afternoon, Neeraj. REC, that stock is in focus. Remember, we saw a good correction coming in this week, and after that, some bounce back in trade. Dealers are recommending a buy today, sell tomorrow kind of a strategy, given the fact that a sharp, exposure is expected on an overall basis. As far as United Spirits is concerned, that is also one of the stocks in the FMCG pack, clearly outperforming in trade, 4% up for that one on good volumes, mind you. And dealers do indicate that domestic funds are buyers as far as this counter is concerned for trade today. And finally, Balrampur Chini, and in general, for sugar stocks, it has been a very good day today. Dealers do recommend, buying at current levels, as HNIs are expected to lap up shares in sugar stocks on the back of speculation that from here on also the international sugar prices should strengthen, especially in the Indian context. But Darshan has a few more stocks to talk.
Yeah, so at least mine, the first stock is on the negative side. UPL is down in trade. Some of the domestic funds have actually been sellers in the counter at higher levels. So that is something that dealers are talking about. The other company in which dealers are talking about is Jubilant FoodWorks, which is down over 1% in today's trade. Numbers not out yet, but dealers anticipate that it will be a weak first quarter. You've seen the valuation concern in some of these high PE stocks, and the commentary that's come in from some of the companies does indicate that there is a slowdown. So on a high base, probably the number won't be looking very, very good for Jubilant FoodWorks. And the last is Infosys. Numbers out today. Dealers anticipate a strong set of numbers from Infosys. They probably even anticipate a bit of rise as far as their guidance is concerned. So that's something that we're hearing from the dealing rooms.
All right, Darshan, thanks very much for that. Interesting if they do that, considering just last quarter they actually started to give slightly more conservative guidance, going back to what Infosys used to do earlier on, which is under promise and over deliver. 726 is where the stock's currently trading at. But I want to keep it with Balrampur Chini and Vinay. Do you track this one?
Yes, I do track, and the stock is trading around almost around its 52-week high and looking good. If you compare it with other sugar stocks, this is a relatively better placed chart, and I think it can move further on the upside. 162 is the current market price, and I think it is heading for the next 5 to 7% up move. So yes, the trend is bullish. The everything oscillator parameters, moving average parameters are suggesting going long at this particular price. So yes, I am expecting this to extend the upward rally, and I am expecting a level of 170 in the short term, and traders can keep a stop loss of 155 in mind.
Okay, sugar stocks doing well. Majority of them are up and about, and some strong gains coming in. Just 10 minutes to go, by the way, for markets to shut shop. Let's get you some closing strategies for Monday's trade. Abhijit, any BTST or any STBT for Monday?
Actually, Nifty is closing at a very delicate level, so I would not venture to take any positions over the weekend. Even short is risky as well as long is risky. I would wait for Monday open and then decide if 11,500 doesn't break, then go long and not do anything over the weekend.
Okay. So no positions being taken from Abhijit. Vinay, what about you? Would you take a bet?
Yes, I would definitely take a bet, and the stock like Biocon can do good, and I think BTST strategy can be done in the Biocon. Pharma space has been showing outperformance, and Biocon is one of the stock is which has reversed from the strong support, which was the gap in the 2017, and it took support there and reversed northward. So I think Biocon can be traded long, and you can do BTST also. And another stock which I like on the charts is the Hero MotoCorp, which has formed a bullish hammer candlestick pattern on the weekly charts. So these are the two stocks you can trade long with an appropriate stop loss, and this is purely a trading call which can be kept done with a strict stop losses. So Hero MotoCorp and Biocon looks good for the short term.
Okay. Well, watch out for those trading bets as well. Metropolis is the one which is top of the pile when it comes to stocks which are with the highest gains and trading at 52-week highs. So do watch out for that one. Deepak, wanted to quiz you on this. Would you be a buyer in SpiceJet? While the aviation story is whatever it is, would Indigo's issues over the medium term help SpiceJet by perception, maybe by money flowing into it, and by virtue of the fact that both Indigo and SpiceJet on ground would have gained some market share?
Well, yes, I mean, from that third point, I agree that SpiceJet and Indigo would have gained market share. Jet's demise would have helped them. It isn't apparent yet, of course, that SpiceJet's woes are over. We've seen a lot of issues they've been having with DGCA recently with respect to certain set of operating issues with respect to planes, whether it was landing or whether it was issues in the air. I think there have been some issues which they have been dinged for, but we haven't seen any action from the regulator so far. Indigo's woes are largely related to corporate, board issues, and some of them are name calling by founders who perhaps no longer like each other, and some issues around the concepts around this. So I don't think I don't think I'm a buyer in SpiceJet for Indigo's woes. But yes, because of the issues, I think issues in jet, I think they will gain market share. Having said that, I feel there is a problem in the aviation space in general. They are not able to make profits even during such times, and we'll wait till results till that turns out. If they aren't able to show profits in these times, and pretty good profits at that, I don't think there's any better time fundamentally. So therefore, I would not be a buyer in this sector if profits aren't showing a substantial jump in this last quarter.
Okay. That is a quick take on aviation as a pocket. Abhijit, Godrej Properties, high of 1120, now at around 940 odd, I think. What would you do here? Abhijit, that was for you.
Yeah, right now it's in a no trade zone, so I would wait for some clarity, maybe in the next couple of days, and only this week's high and low are crucial for that, and then I'll like to take a trade in that.
Vinay, what about you?
Godrej property has corrected from the 1120 to let's say the 870 was a recent bottom. It has started again on the upward journey, has been again started. Overall trend has been good. I'm not suggesting for pure short term, but if you are a positional trader, then definitely the stock like this, which has given a breakout on the medium to long term charts, monthly and quarterly charts, this can be considered for the positional trading, but it is not recommended for 2-3 days strategy. It can be taken for a, let's say, 1 to 2 month strategy. Overall real estate sector has been doing good, and Godrej Property is the leader in this particular space. So yes, definitely for investor and for positional traders, Godrej Property looks better on the chart.
Deepak, before we let you go, final thoughts from you. Do you expect the markets to stay where they are? Because we will be tracking the earnings season, budget is done, elections are done. Valuations still, compared to the other markets, remain on the higher side. Where do you see the markets headed from here on?
So, while the big events are done, honestly, I think there is more events, if you may, to come, because we've got a RBI meet coming in soon. We've seen the 10-year yield come down to below 6.5. It's been a phenomenal run if you've been in bonds or in gilt funds. And I think there's more to go. I think RBI will demonstrate and perhaps cut a little more, and that's going to drive market expectations. There is also a revival of the NBFC space that is likely through deals, which I think will emerge in the next 1 or 2 months. These deals will be asset sales, both from the NBFC assets themselves and of troubled entities which NBFCs have lent to, that will do asset sales. So I think quite interesting times ahead. I expect the market to correct before it rises, but the broad market is already corrected. So I don't think anybody who's in mid caps and small caps thinks that another 5% is even a correction. Nowadays it's 1 day. So really, it's going to have to be the earnings that drive our growth. We're already seeing some. We saw GNA today, fantastic earnings growth, although they told us only 10%. They're at 30% EPS and profit growth. If more companies come in and show that kind of profit growth in the back of what seems to be a horrendous quarter for the economy, then I think our revival is probably a quarter or two away. So if you're looking long term, this is a good time to start picking your stocks. And although they may go down more, deal with the volatility and wait for the fundamentals or follow the fundamentals from now on.
Deepak, stay on. We'll want to take a final thought from you. Abhijit, Phatak, one last question. Infosys, ahead of the results delivery, would you go out and initiate any trades?
Infosys, I would like to go short if it doesn't cross 750 tomorrow. No trades right now. Maybe a strangle 700 put short and 800 call short. But if it doesn't cross 750 at open, I would like to go short with the high as a stop loss.
Okay, but not of the results. Okay, gentlemen, both of you, thank you so much for joining in and giving us that perspective. Deepak, just do stay on. We'll take in final thoughts from you post-market close. But here's how the markets are shutting shop. About a third of a percent for the Nifty 50 and the Nifty Bank. A quarter of a percent for the Nifty 50, a third of a percent for the Nifty Bank. So not the best of closes, but it's okay. I mean, it's not been arguably a really great week, to be honest. we are testing those 11,500 odd levels almost very recurringly. The mid caps and the small caps maybe a tad bit better, but certainly off the highs of the day. The mid cap index was up almost 1% at the start of the show, currently about 0.4%. Let me talk about the large caps before Navneet brings up to speed with what's happening at the broader end of the spectrum. Vedanta 2.5%, Yes Bank about 2.5%, there is Asian Paints 2.5%. Strength in Hero MotoCorp, Tata Motors, so autos seem to have done reasonably okay for themselves. Infosys ahead of the numbers, up another 1%. What's not done well? Wipro ONGC, that is weakness in Bajaj Finance, down another 2%. Power Grid 1.5%, Axis Bank 1.5%, and IndusInd Bank 1.5%. So post results, the commentary from IndusInd about the provisions, I reckon, is what's led to this bit of a pullback into IndusInd Bank. It's also a stock that's done very well in the run-up to the results, so maybe that was also playing its part. But if large caps have stayed subdued, while mid caps in the green, Navneet, off the highs of the day, the indices.
That's right, Neeraj. In fact, there were a few earnings from the broader markets which came and they really surprised the market. So GTPL Hathway is one stock which was locked in upper circuit with gains of 20%. The subscription numbers were pretty good, up about 47%. The other one which came out with the numbers today was GNA Axles. Margins improved to 16%. Bottom line growth of about 30% seen, and this one too is closing with gains of about 20%. The other gain is the entire sugar pack was up and about. So you had stocks like Uttam Sugar, Balrampur Chini, which saw strong gains in the second half of the session. Uttam Sugar surging nearly 13%, and Balrampur Sugar also closing with gains of about 11% at the high point of the day. Quest Corp went up in trade after it informed the exchanges that they have issued preference shares to Amazon worth about 51 crore rupees, and the price was way ahead to what the current market price that you can see on the screen. It was about 676, so good premium to the current market price, 9% higher for the stock as well. United Spirits, one of the F&O gainers for today, surged about closer to 4%, finally closing with gains of about 3.5%. Apollo Hospitals was quite strong right from the word go in the morning. So though the markets were quite volatile today, but this one sustained the gains, and in fact it's closing at day's high with gains of about 4%. The steel stocks were up and about. Jindal Steel was one among those which went up in trade, 4.5% gains seen here. And V-Guard, this one too had a good Friday. It surged about 6 to 7% and closing at day's high around the levels of 248. So these were the gainers. Some losers. Eris Life Sciences touched its 52-week low today. The counter fell about closer to 8%. You also had Dewan Housing, which saw some selling pressure in today's trade. Actually, not only today, this has been weak throughout the week. 4% lower for Dewan Housing. Engineers India was down, and some other counters like InfoEdge alongside Cox & Kings, which continues to be weak. Cox & Kings was locked in lower circuit of 5% today, closing at levels of about 22 rupees.
And another downgrade coming in for Cox & Kings there. But quickly looking at the weekly performance of the Nifty 50, today's session has brought it lower by 35 points in the Nifty. Bank Nifty also ending the day in the red by about 0.5%. Nifty tally for the week is now down about 2.25%. And what's led to this fall has been stocks like Titan, which has been down about 13%. Indiabulls Housing Finance 8% given up in this week. Bajaj Finance, the big one there, losing about 9% Larsen & Toubro 6%. Maruti, Axis Bank, PPCL. So a lot of those cuts coming in there across the board. Amongst the gainers, Sun Pharma does well this week. Yes Bank sees a bounce from those levels of 88. Adani Ports, Vedanta, and Infosys about 1.5% ahead of its numbers this week.
All right, that's about the Nifty constituents. Let's also look at the broader markets and check how the Nifty mid-cap index performed during the week. Remember, the weakness was seen across the board, where Nifty fell about over 2% in trade. You also had the mid-cap index falling by the same ratio, 2.2% lower here. A couple of gainers first. Quest Corp went up primarily in today's session after the news of allotting preference shares to Amazon, up about 8%. Spark was up about 6%. Apollo Hospitals saw strong gains today. Actually, there were long positions seen on the future side as well. IGL steel stocks were up and about, and Glenmark Pharma is up about 4% for this week. And there was some bounce back actually seen for a couple of pharma counters. You also had Alchem, which went up in trade. V-Guard had a good session today, and for the week it's up about 2.5%. On the losing side, Mindtree, the old guard, resigned and reacted reacting to that news was the company stock, which was down 15% for the week. Dewan Housing down 14%. Stocks like HEG, India Bulls, Dilip Bilcon, REC, SRF, a couple of other losers for the week. Just want to highlight Bata, which has been lower for the last 5 sessions. There's a lot of short positions being built up in this counter.
All right, and quickly, you know what happened in the broader market space, the advance decline ratio and the turnover for today before we get in closing comments. So today's day, almost an even keel. In the morning, there was a lot of crisscrosses there between the advances and the declines, but towards the end, you had almost a merger there. 736 stocks advance, 772 decline. Turnover, 7,56,000. So on the lower side, obviously, first day after the weekly options expiry. But the cash market turnover is encouraging. 27,000 crores yesterday, today about 30,000 crores. Getting in some closing comments then from our experts who are still here with us. Vinay, we'll start off with you. What will... all right, I don't think Vinay is there with us. Deepak is the only guest with us right now. But Deepak, moving forward from a short to medium term standpoint, keeping in mind how Q1 earnings season is expected to pan out, any positive or negative surprises that you're anticipating from any individual stocks?
Well, I guess, you know, to be fair, if I'm anticipating them, then they're probably not surprises. But I don't think markets will... you know, it's easy to predict where things are. Things look a little lousy in terms of car sales. I think the auto producers will be expected to give extremely bad numbers. If that changes, if they're able to actually manage their inputs and outputs and they actually give a decent quarter, that will be a fillip for them. The stock prices have corrected quite substantially. We are also seeing the initial signs of some capex in companies, so I'm expecting the capital goods industry to start showing some numbers that are positive. Of course, I mean, it may not happen this quarter, but I'd be surprised if that did happen. And I'm also looking at velocity of sales in real estate companies. I think that's an indicator of whether the real estate companies are willing to do deals at lower prices, because prices have definitely come down. So if the velocity goes up, I think that is a signal for perhaps the beginning of the end, rather, or, you know, of a distressed sale situation in real estate. Otherwise, the market seems fairly, it's led by liquidity, it's led by a lot of sentiment and news right now. So with the fundamentals, if they have to drive it, I think I want to see a rapid increase in earnings. Fundamental earnings from a lot of companies, and, you know, let's hope this season brings us that.
All right, Deepak, we'll leave it at that. Thank you so very much for joining us this afternoon. And on that note, it's a wrap on Countdown from Navneet, Dheeraj, myself and the entire team that's put this show together. But don't go anywhere. Infosys numbers will be out shortly, so all eyes out on that.